Guys, in this video, I'm going to be showing you another very simple and effective trading strategy. This time, we're going to be using Fibonacci levels to help you stay on the right side and catching those market moves that are presenting themselves. Let's jump straight into this one, baby. Hey guys, well, I just had to take off my jumper there. That 10-second intro that I just gave you really made me hot and flustered. So, okay, guys, we are back in the office, by the way. You see in my last video, we were living it up there in Italy. Beautiful place. It was amazing, amazing vibes. Some people, I guarantee, well, some of you did message me, like, is that a backdrop in your video? No, I was in Italy. That was real. That was our apartment. Those were the amazing views. Beautiful. Did amazing things. I keep saying amazing. Did wonderful things for the mindset. Anyway, let's jump straight into what's the purpose of this video. I want to show you the effectiveness, how you can implement Fibonacci's, the use of Fibonacci's, and really, help your trading go to the next level as well, just by having this added confluence and strategy. As I say, you can take little takeaways from this video and implement into your own style, or you can literally use this potentially to help you extract some more money from the market. So, Fibonacci levels, when do we typically use them? They are beautiful, okay? They are magnificente. They are incorporated into my trading strategy. When they're proving really their effectiveness in, trending markets, right? We have, like, if you look on for example, on a higher time frame, you see that overall trend is to the upside, let's say, for example, right? Now, what you want to be doing, obviously, during this trend to the upside, we typically see times when we have, the buyers just running out of a little bit of momentum, the bulls, from their journey to the north, essentially having a breather, after all this buying bullish momentum. So we see this little pullback as the bulls just take a little break. Or what it may be as well is essentially profit taking, right? We've had this decent run to the upside. People want to cash out, cha-ching, taking some profits. So naturally you see the prices pull back, right? Now, this is the beautiful part. When we get these pullbacks, essentially in a trend to the upside, we want to know when when we're seeing those pullbacks, when a good time is to then get in, buying on those dips, right? We know the trend is overall to the upside, and now we want to cash in on get it, or at least get a piece of the pie in jumping in on that pullback. So buying on those dips. And these Fibonacci's, and I'm going to show you in our demo area shortly how we effectively use those and the key ones to be aware of, but essentially when to buy on those dips with the use of Fibonacci levels. The same thing as I just explained there with the uptrend works in the downtrend as well. We're marking these Fibonacci's from the swing low to the swing high, or the swing high to the swing low. And I'm going to show you some really, really good examples how to leverage off those. So it's just essentially buying in or selling when we get these retracements. Fibonacci retracement levels. They go back years, and I'm going to say amazing or beautiful. I need to avoid let's think of something else. The powerful, yes! The powerful thing about them is it's about mass psychology. A large part of the market use Fibonacci levels as well. So everyone's aware of these. So if everyone's keeping an eye on these key fibs, then typically, they're going to be quite responsive, typically speaking. Obviously, there are times when these big institutions do their little stop hunting tricks. You little cheeky buggers. Right, guys, let's go straight over to the demo area now. Let's get it. Hey, baby. So we are over at my demonstration area. Are you staying lit with me? Please tell me you are. So guys, let's jump straight into this. I want to show you the effectiveness of incorporating Fibonacci levels into your trading. So as an example here, this is my baby, GU. This is GBP dollar. GU was the currency. I always say to people, pick a pair, pair across, that you're going to master. You're going to get to know her in and out, right? And GU was my day one. Okay, GU was my day one. Now I've expanded to pretty much all dollar related, but this is what I mastered initially. So I always suggest, if you are just starting out, or if you are trading and you're not having a lot of success, one of obviously many other reasons will be that, look, you need to focus on one. Okay, get to know them. You'll pick out certain patterns and things that it does in certain times of the day. You'll just get to know it. You can't know all of the other pairs' behaviors, in time, yes, but master one first. Anyway, I'm blabbering on about something else. Let's get into this demonstration. So what I want to do here, I can see that the trend to the downside is on is to the downside on the daily here for GBP dollar. So I'm going to go to Fibonacci on this, by the way, on TradingView. So I'm marking it from the swing high here down to the swing low, the most extreme low that I can see in this downward trend, as you can see there. Okay, swing high to swing low. Now remember, purpose of Fibonacci is when we know the market's trending, we want to get in on, you know, when we're seeing these pullbacks. So in this case, these rallies, we want to know when to sell those rallies because we can see the trend is to the downside. We're just seeing the bears. In this case, they're running out of momentum. They need to have a breather, right? They've been growling all however many days, so they need a time to relax. People closing out, taking profits, so on and so forth. Now, the key Fibonacci areas, firstly, that you want to be looking at are, right? Let me just remove this. Your 38.2% Fibonacci, your 50%, and your 61.8% Fibonacci. For me, okay, in my years in this market, those are the ones that have proven their significance, okay? They've proven their significance to me. So you want to be keeping an eye on them. In this case here, we're looking out for these as resistance levels, key areas where GU is going to get knocked back. Get back down there. Get down. Where GU is essentially going to get back down where it should belong. All the way down there, mister or Mrs. So, let's see. Right, so we've already seen, we've marked this up from the swing high down to the swing low. So, all of this, right? Now, we're looking for our next opportunities to short. Okay? Boom. 38.2% Fibonacci, you can see their rejection. Now, again, I'm just going to mark one of my zones here because I can see this anyways as a zone. Okay, a zone where I know sellers are camped. Now, look, the beautiful thing about this is 38.2%. Look, we saw rejections there as well. Look, you can see it's proven its significance. So rejection. Now, for me, I am looking for other confluences as well. Now, we've got a good case here. We've got a good example because we've seen a bearish engulfing. Like that rejection was hard. Like GU was really punched there, back down. So we've got a nice bearish engulfing candlestick here, engulfing that of what was seen here in terms of that candle, which almost is pretty much an evening star. And then look to the left. We know this is a top area anyway. Look, it's like a top. Okay, almost pretty much a double top neckline down here. So, one, we've seen a rejection at that 38.2% Fibonacci. Two, it's a bit of a top area. Three, we've been consolidating, forming like this flag structure, ascending channel, subject to a breakout anyway to the downside, technically. So we've pretty much got a number of confluences now to go short. And that 38.2% Fibonacci proving, as I said, its significance. You're looking out for that as resistance in this downward trend, right? We're looking out for opportunities to get back in with the trend after it's taken its breather and continue to the downside. So, as I say, this is tying it in, finding other confluences. And it really, really does complement really nicely, just like I don't know, I was going to try and think of a food dish that complements, but I couldn't. Anyway, so tie it in with your strategy. Now, let's look left. I want to find an example of when we could use it to the upside, right? And buying on the dips. Let's quickly find a nice example. Okay, this looks like it's going to be a nice one. Back here in January, and I'm going to go to the swing high here. Okay, so in January. So start of January 2019. To the end of January. So let's mark it up. Swing low to the swing high that we would have had marked up here. We can see GU's in an upward trend. So that's why we're marking it up to this extreme high. Just going to extend this out. Okay, beautiful. This is a really, really nice example. So we've been in an upward trend and now we're trying to scope out where can we get in to buy on these dips, essentially. Remember the key levels we're looking at. We're looking at the 38.2%, we're looking at the 50%, and we're looking at the 61.8% Fibonacci. So what you can see here is a really, really nice, we're getting a pullback, cooling, and boom. Look at this. I was trying to find a drawing tool. Anyway, boom. Right on that 50% Fibonacci. So now we know, okay, this has supported the price. The buying momentum is going to come back into play. Now, the beautiful thing, again, I'm saying beautiful, is look, we formed. So this is a couple of confluences here. One, formed like a morning star, okay? Suggests that the sellers have run out of momentum. We're going to see a change in trend. Two, we bounced at our 50% Fibonacci. Three, Look at that. It engulfs. It's a bullish engulfing candlestick. Dwarfs that little mini morning star. So we know the buy momentum's come back into play, and we very much saw that. Okay, look, we broke out and retested that 38.2% Fibonacci. Got freedom to just run to the upside now. Carry on. And that was just perfectly buying on that retracement. We saw the trend was to the upside. Pulls back, retracement. Finding that scope in that key fib, whether it's 38.2% Fibonacci, the 50% or the 61.8%, and then buying on that. Guys, now I just want to quickly cut over to GJ. There was a really nice trade that we took with our live trading community. Called it live. We took the trade together, and I don't think I actually mentioned it at the time, but I'm going to show you after how Fibonacci actually played a part in that role. But just go and take a look at that trade that we all took.
Okay, let's go on a daily first. Okay, wow, the daily's pretty bullish anyway. You see how we were ranging here? 1, 2, 3, 4, 5, 5-day range, big smash out of that range. We had a pennant there as well. So a couple of confluences, right? One, breaking out of the range. 2, pennant structure on the daily time frame. My next confluence, okay, I'm working my way top down. The 4 hour, I'm looking to the left. I see we had a nice bullish candlestick above that. Now, typically, if you want to be conservative, you can wait, see how this 4 hour closes, because sometimes this could be a fake out and then we end up sucking back below, okay? But we've broken above, we've retested the current low of this 4 hour candlestick. So in theory, it makes way further upside. We've got another potential confluence there. And then as I showed you on the 30 minute, on the lower time frame, okay, flag structure, range. And now you see how it's broken out, and the current sort of wick of that we've retested. So it does in theory present quite a few confluences for upside. I mean, bear in mind, we're already up today, 67 pips. But again, looking at about 55 pips there. And that does take us up towards that upper acting trend line. Again, placing stops just below. I'd go just below where we wick there within that. And that presents pretty nice opportunity there of some, over 2.5 risk to reward. So that good trade opportunity here, in my view. Just gone over all of those confluences from the top down to this 30 minute for potential entry, which is quite nice there for GJ. I'm just actually taking the trade myself now. Right, on.
So you see that beautiful. It's a really, really nice trade setup there for GJ. I had multiple confluences for taking it, as I showed you there. Guys, if you want to get involved in our trading community, check out the lifetime membership offer. It's still running at the moment. Link is in the description of this video. We really go through everything. You've got my courses, my fundamental, my technical course. You've got our daily analysis service, fundamentals and technicals, trade ideas, so on and so forth. And then you get the part of the trading community, the live webinars where we take trades, cover events, one-to-one calls. It's endless. Let's jump straight back into this. So GJ on that trade, by the way, look, similar to that GU that I was showing you before, swing high, down to the swing low, extending that out. Okay, so we know this has been in a downward trend, GJ. Okay, so me have taken that trade. I was somewhat counter trend trading, okay, because we know this trend's been to the downside here. And look, if we go down on that 4 hour chart, what we could have said, as I explained in that video, right, we took out this high area, right, this top area from earlier October. We broke out and we retested. You see, remember, the significance is 38.2% Fibonacci. The fact that we closed above that and then we retested that on the wick of this candlestick, and that 38.2%, we know that's a significant level of resistance. The fact that we've broken through that level, we've retested it, it makes way for some near-term upside. And then obviously we ran into that resistance there. At that, there's multiple confluences there for the shorts. We ran into the resistance as part of this ascending channel structure, this bearish flag. I love my flags. And then we had like exhaustion sort of candles here, like morning stars, evening stars, at the top of trends. And then some downside momentum coming into play, and we even broke out. And we're just retesting this as I speak today and recording this sort of flag structure. We'll see if we can get some nice rejections there. So again, that was a bit of use of the Fibonacci. Remember, okay, let's summarize. 38.2% Fibonacci, 50%, 61.8% Fibonacci. Those are the three. The middle ones that you want to keep an eye on. Okay, though, as I say, those have proven their significance. Don't use it as the be-all and end-all, but they, as I say, they complement a lot of other confluences, right? Whether you're paying attention to candlesticks, price action, using chart patterns, use them, guys. They will, honestly, they will really be an added like confirmation for you. Okay, yes, I know it's a key area that we're at. We're going to see why or whatever, this happened or this happened, whatever the case may be. You get the point. Guys, if you enjoyed this video, please, it means like a lot to me if you just stay lit with me, smash up that subscribe button, hit that like. I wish there was instead of that like, I should see if I can code it and customize it to this sign, the lit sign. It means a lot for us. Check out the link in the description as well, guys, for that amazing lifetime offer. Stay lit. Let's get it.